Hey, look who it is. A once well-known Tesla short seller who destroyed his hedge fund, totally unrelated to attempting to short Tesla essentially for a decade running. That fund, by the way, has since been closed, having collapsed in value. Let me just double check. According to hedgeweek.com, assets under management, which peaked at around $8 billion in 2008, had dwindled to less than $200 million at the time it was announced the fund would be closing down. Now, I'm not suggesting that this is because shorting Tesla stock is a bad idea and they blew up the entire fund doing so. In fact, that's probably unlikely, although the fact that Jim continued to short Tesla stock, say it was overvalued, the competition was coming, blah, 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 may have caused a lot of prior investors to pull capital out of the fund going, "You idiot, what are you doing, bro? Stop punching yourself in the face and losing our money trying to bet against Tesla. What are you doing?" Of course, we'll never know the real reason why assets under management collapsed from $8 billion to less than $200 million, but that is a truly catastrophic collapse in assets managed. And if you're a long-term viewer of the channel, you'll have seen me featuring commentary from Dim Chanos over the last almost 6 years, pointing out many of the flaws in his thinking around Tesla. Yet I've got a funny feeling 10 years from now, assuming he's still in good health, Dim Chanos will continue to explain to us why Tesla is massively overvalued, why Elon Musk is a liar, and why retail investors are dumb fucks who don't understand anything, and that is the reason why Tesla stock is currently valued what it is, as opposed to investors overall recognizing some underlying value there. I've yet to watch this clip from Dim Chanos, but brother, I can't fucking wait, because every time this guy opens his mouth about Tesla, I'm reminded that even somebody who might perform okay academically can simultaneously be completely fucking retarded. Please don't disappoint Jim. By the way, let's play a drinking game. Don't actually, alcohol's bad. But predictions here. He's going to mention, now not all these things, it won't be a clean sweep because I'm going to say a lot of things, but overvalued, narrative, fantasy, future, robotaxis, AI, as opposed to they're just a car company. I think he's going to suggest that investors who are retarded and deluded and, retail investors, us dumbasses, are deluding ourselves into thinking that there's any value whatsoever in Tesla's future business opportunities, including robotaxi, including humanoid robots, blah, blah, blah. This is, of course, Jim. Tesla is just a car company, and also the competition is coming, Chanos. He may even question the honesty of Elon Musk or allude to some of the promises in terms of deadlines that have been a little bit late. Over to you, Jim.
Is a company whose earnings are declining, its revenues are declining, its valuation is increasing because investors are pointing to robotaxis, autonomous.
All right, boom. Big tick for the first one.
Robots. And then I joked this morning, asteroid mining by robots. I mean, the stories that keep building onto this company as people put hopes and dreams on back of one company and one entrepreneur, quite frankly, are just, sort of getting excessive. And we can definitely see the profits are dropping, unit sales are dropping, margins are coming down.
By the way, just let me translate. Tesla is just a car company, therefore let me explain the just a car company component of the business. Ignore the massive opportunities building with AI, robotaxis, the humanoid robots. Let's also ignore the cyclical nature of Tesla's business. I feel bad for Jim, I really do. He's just so intent on being right about Tesla being overvalued, he'll perform any amount of mental gymnastics required to confirm to himself that he's right and the whole market is wrong. On screen now, just a little bit of context, by the way. This is obviously Elon's fault. We're looking at Honda's free cash flow, quarterly cash flow in millions of dollars. And I noticed a trend. Honda's free cash flow, 4 consecutive quarters of negative free cash flow. The trend not looking great here. Is it possible that sky-high interest rates, economic uncertainty, and the cyclical nature of the automotive industry may possibly be a temporary contributing factor? Of course, I'm definitely too dumb to know the answer to that question, so I hope Jim can explain in more detail what could be accounting for this.
And yet people think that robotaxis will be amazingly profitable and that we're all going to have a robot in our backyard doing lawn work, whatever. The reality is we might, but it might very much look like the car business itself today. Lots of vendors, a lot of commodity business, buy a robot for $30,000 and the manufacturer will make $3,000 on it.
He does have a pretty...
Dim Chanos seems to be coping a little hard here. Now, it's true, anything could happen. But what is essentially suggested there, and he wasn't actually firm about this, it could possibly be that it's just like the car business, lots of vendors, low margins, blah, blah, blah. Previously, Jim was the same guy who, the competition's coming, just wait till the big boys arrive, Tesla's fuck, blah, blah, blah. Now he's a little bit more, well, there's certainly going to be a lot of companies trying to produce humanoid robots. But let's go back to the automotive business, since Jim likes to focus on this a lot. Electric vehicles, essentially computers on wheels. Tesla one of the only companies on the entire fucking planet making any money selling electric vehicles at all. Most other companies, most other vendors trying to develop this new technology, electric vehicles, trying to compete with Tesla on cost, are losing money doing so. Tesla's actually making money. Never mind their massive scale. So what we can see here is Tesla have demonstrated an ability to reach massive scale, produce compelling products, and do so profitably, whereas most other companies attempting to go after the same opportunity still can't make any money, nor have any of them reached comparable scale. The one exception being BYD, but they got a lot of complexity in their business. So if you didn't know anything else, you go, okay, well, Tesla has an ability here to massively scale production of computers on wheels, electric vehicles, do so profitably. No one else has exceeded their profitability or scale. Wonder what happens when a whole new industry is developing, humanoid robots. What are the odds that Tesla might have a cost and scale advantage there as well? Never mind robotaxis. I do have to just, it's so funny, right? This guy, dead set for like a decade, roughly, was shorting Tesla stock. Just a car company, competition's coming. Now the narrative from Jim is, robotaxis and robots might happen, but if they do, there's probably going to be lots of other companies that also offer them, and even if they do, they're probably not going to have very good margins. It'll be just like the car business, which is pretty funny to hear a guy talking about businesses that aren't a car business and Tesla in the same sentence, tacitly acknowledging they're not just a car company, who previously was saying they are just a car company many times. Anyway, like I said, bro, the guy's going to go to the grave saying Tesla's overvalued, investors are deluded, hopes and dreams, blah, 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 blah. I feel bad for this guy. Something's faulty with his thinking and reasoning. What else is there to say?
Pretty good head start, though, on much of the competition. I know that, Uber has its own aspirations, and obviously Waymo is what it is at this point. But he has a much greater head start, does he not?
Yeah, but I don't think running in effect the taxi service is the lucrative business the bulls think it is. People are talking about $2 a mile, and his cost will be very, very low. The fact of the matter is actually owning the asset, which Uber and Lyft don't do, right? That's on the driver. Paying commercial insurance and all of the other costs, cleaning, whatever, downtime. Your costs get north of $1 pretty quickly per mile.
Oh my God, I got so much to say. Isn't it actually pretty funny, right? Just a car company dude is now acknowledging Tesla's robotaxi business and talking about some of the cost structure. So here's the thing. We don't need to get too detailed on this. Just let's use our brains at a really high level. Biggest cost in providing a taxi or Uber-like service is, ready, wait for it, paying the fucking driver. If you delete the driver, you deleted the biggest cost. You don't need to know anything else. If you delete the biggest cost, the driver, you have a huge cost advantage over today's Uber, taxi, etc. Anything that requires a driver. Obvious things are obvious. It doesn't matter because they also need insurance, repairs, maintenance, whatever. Delete the biggest cost, you have a cost advantage, okay? Let's all acknowledge this point. As for Jim's point about Uber, Lyft, etc. not actually owning the vehicle, it's true, which means that if Tesla were to own the vehicle, they do have a higher hardware cost initially to put on roads. But number one, Tesla's going to have a hybrid model. In addition to producing cybercabs themselves and likely operating their own fleet of autonomous vehicles, which they'll be able to put on roads, total cost probably like 20 grand or less, very quick payback period. Tesla's also going to have consumers of Tesla products who already own Tesla vehicles who'll be able to supplement Tesla's own fleet by adding their privately owned vehicle to the fleet when it suits them. And Tesla will take a cut of all these fares. But I just really quickly want to do the math on payback period regarding hardware. Today, you can buy an entry-level Tesla vehicle for about $40,000 US. They make a margin on that, and that's profitable, right? So their actual cost to produce these things in the low $30,000 range. The Cybercab itself, to actually put that on roads, probably sub $20,000 at scale. A typical full-time taxi will do well in excess of 50,000 miles per year. Let's do some math. I'm not very good at math. Jim probably is. I guess that's why he's on CNBS and I'm not. In fact, I don't think I even need a calculator for this one. Ready? Let's say, hypothetically, Tesla's charging $2 per mile, comparable to an Uber or Lyft today, at least in the early days, as they're scaling up their fleet. If they don't have to pay a driver, this is fairly high profit. How long is one of these cybercabs, a dedicated piece of hardware that Tesla's put on roads for, let's call it 20, worst case maybe $25,000 US, going to take to repay its entire cost if it's doing 50, 60, 70,000 miles per year? So like I said, I'm very bad at math. I'm not even going to use a calculator though, so please tell me if I make a mistake in the comments below. But let's say that it costs Tesla $25,000 to manufacture a cybercab and put it on roads. Let's say that Tesla charges $2 per mile. I suspect over time it's going to be a lot less, but easy numbers, comparable to an Uber or Lyft today, while they're ramping up their fleet. And let's just say that a cybercab does 50,000 miles per year, probably a little bit on the low end for a full-time robotaxi, but hey, whatever. This is in the vicinity of a full-time taxi today, but a little bit lower. And let's say they make 50 cents per mile, a 25% profit. Probably also on the low end. Remember, they don't have to pay a driver, but easy numbers. So let's try and do the math here. 50,000 miles times 50 cents profit per mile equals... All right, I'm going to have to count here. Let me see here. Oh my goodness! Can you believe it? That equals exactly $25,000. Oh my goodness, what a coincidence. In other words, a cybercab with an unusually high cost to produce and an unbelievably low profit margin per mile could, in a single year of operation, doing less miles than a full-time taxi does today, cover its entire hardware cost, meaning in year 2, 3, 4, 5, blah, 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 you essentially have a free piece of hardware. This whole argument, though, is pretty stupid, because what we really want to be asking is, how much could another company, eventually who's also solved autonomy, put their hardware on roads for? And as I record this, while Tesla's profitably selling vehicles that they're producing for in the low $30,000 range, this is before the Cybercab enters production. Waymo's cost to put a comparable piece of hardware on roads is over $100,000. So do the math, Jim. The only argument Jim could come back with is, well, yeah, of course, but all the other companies are going to press the magic catch up to Tesla button and they'll delete their drivers instantly too. And they'll also figure out how to mass manufacture compelling autonomous electric vehicles for the same cost as Tesla, even though not a single company on the fucking planet can do that today with electric vehicles, period. But that's because they just haven't pressed the magic catch up to Tesla button. Again, I actually feel bad for Jim. The cope here is truly next level. He's really just trying his hardest to find reasons why Tesla's Robotaxi business can't possibly be the money printer that investors believe it will be. P.S. Why is he even talking about Robotaxis when, as we know, according to Jim, Tesla is just a car company?
And with more supply coming in and costs relatively high, it's not an amazingly lucrative business.
Wait. Did he just suggested that the costs of Robotaxis will be relatively high? Is this what he... Having deleted the biggest cost of transport as a service, the driver? What? Did I misunderstand? Did he really just imply that after you delete the biggest cost per mile, delivering transport as a service, taxi, Uber, the driver, you delete that, the cost will be relatively high? Relative to what? Teleportation? Jesus Christ, dude.
Entire ride-hailing business in the U.S., we estimate it's a $50 to $75 billion business, which is dominated by Uber and Lyft, and private cabs like we have in New York. It's not a huge...
Oh yeah, and of course, here's where it goes. It's not a huge market, Jim, brother. Surely you would understand that if the cost for the thing falls dramatically, e.g. you delete the biggest cost, which would be paying a driver, then you can offer the service, the product, the thing, at a much lower cost than it's available today. Wait for it, righty? Meaning that more people can afford to use the service if it has a much lower cost in the future than it does today. Meaning, wait for it, this is a crazy leap, I know, but more people probably will actually use the service. I know this is a wild concept, but cost comes down, total addressable market goes up. Is it possible, Jim, that maybe in the future, the total size of the transport as a service market could actually expand beyond its current size if costs come down? I mean, I obviously don't know the answer to that, so hopefully Jim can get back to me on this point. So I just want to try and recap what we've heard. Again, same guy who was actively shorting Tesla for essentially a decade and saying the entire time they're just a car company, the competition's coming, wait till Audi and Mercedes and blah, blah, blah. Has tacitly acknowledged that Tesla's not just a car company while also simultaneously trying to imply that, I mean, they kind of are, but he's now talking about Robotaxi. Well, it's probably going to be lots of vendors offering autonomy and it won't be very big margins. It'll be just like the car business. And plus, it's not a very big opportunity anyway. Bro, this guy's beyond help. Can you imagine if we could show Dim Chanos of 3, 4, 5, 6, 7, 8, 9, 10 years ago, a clip of today's Dim Chanos talking about Tesla in the same breath as Robotaxis, cost per mile, blah, blah. He would have a fucking meltdown. No, what? Bro, that's fake. There's no way I'd be referring to Tesla and Robotaxis as if it was actually going to happen. Oy, oy, oy. Want more content? Early access? A bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients. Plus, has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.